All right. So, as many of you may know, Cracker Barrel has just changed its iconic logo of Mr. Herschel leaning up against the barrel. And this has sparked a huge social media uproar. But now the logo change is the headline grabbing everyone's attention. But really, this is just the latest spark in a much bigger fire. Cracker Barrel stock has actually been in a steep decline since 2021, dropping from around $150 per share now down to barely $50 per share. So we're going to walk through the key reasons why the brand is struggling, and I'll give you a take on the at the end whether or not the stock has any shot at turning things around, or maybe you guys can give me your opinion on Cracker Barrel stock and if you think this is a decent investment at this point. All right, so let's hop into it. We're gonna jump over here. We're gonna kick this off with this little short video of what Cracker Barrel is doing right now with its stores.
Home style cooking brings family together.
Cracker Barrel is known for its comfort, from its food to its country charm. Many finding it a throwback to a simpler time. But this morning, the company making another effort to look forward, unveiling a new logo that's causing a stir for loyal fans of the beloved Southern chain. Overhauling the iconic logo, missing Uncle Herschel, the man in overalls who's been a fixture since the 1970s. And, well, the barrel. In its place, a simpler, more modern design the company says calls back to its 1969 roots. The rebrand is part of a $700 million transformation meant to bring in younger diners. But the change isn't sitting well with some diners.
This is terrible.
What happened to Grandpa?
Or the markets. Shares of Cracker Barrel plunged 12% Thursday, shedding $94 million in market value, one of the company's worst single-day declines in years. The redesign has also included revamped interiors.
We've got all new lighting, new seating, new tables and chairs.
Dark wood and busy walls out in favor of lighter paint, clean lines, and farmhouse vibes. A move Cracker Barrel says is meant to feel lighter, brighter, and more welcoming.
Real quick, what do you guys think about this? They're gonna change the inside, change the logo. What do you guys think about this?
Its CEO outlining the changes last year.
Our goal is to take what people love about Cracker Barrel and open the aperture a little bit so that more people love Cracker Barrel. So we want to appeal to all generations.
But now it's even sparking political backlash, some calling the redesign woke, drawing critics like the president's son. The company says only 30 of its 660 stores are getting the full makeover, and despite the new branding, the iconic rocking chairs and gift shops are here to stay. Saying in a statement to the AP, our values haven't changed, and Uncle Herschel remains front and center in our restaurants and on our menu. With all restaurant chains hoping to attract younger customers in a difficult economy, Cracker Barrel stirring the pot.
We're going to stop it right there. The restaurant industries are not doing well right now. A lot of them are not. And, I've been a cake shareholder. They have some new, concepts coming to market, but I've recently just sold my cake shares. Not to say I won't buy them back. I think things have just gotten a little out ahead of themselves. But this little chart right here from National Restaurant Association, they've got some scenarios here. It says inflation is straining restaurant operations. In the last 5 years, food and labor costs have went up on average, gone up 35%. That's the cost. And so the other expenses for running a restaurant, the building supplies, credit card fees also going up quickly. Restaurant owners generally try to keep menu prices as low as possible, making an average of 3 to 5% pre-tax margins. So that's restaurant industry is not extremely lucrative, to say the least, right? If 3 to 5% is your target, I mean, what are we talking about here? You got some technology companies hitting 25 and 30 on the regular. But so, they've got this scenario set up here to where without raising the prices, they'd be operating at a significant loss. So here it is saying, food costs, labor costs up 30%, utility 18, occupancy costs up 14, and other costs up 22%. Total expenses up 30%. So if they just kept things the same since pre-pandemic, they'd be operating at I guess that would be a negative 23. I don't know. They would not be making. They'd be operating at a loss based off this model, off of sales of 1.5 million. And then scenario 2 here, this is by them increasing prices by 23.8%. They essentially would just be breaking even, no profitability, even maybe a small loss there. And then based off, so in order to maintain 5% profit margins, they would have to increase the prices by 30.3%. And that would be just to hit a 5% profit margin. Yeah, right there. So there you have it. Currently, right now, as far as our experiences went going out to eat, is that the prices are up. Everybody wants a tip, whether they do good service or bad service, and the portions have gotten smaller. Unless, of course, you go down here and eat at your local Mexican restaurant where you can order. That's like basically all we go and eat, because we can order like $25 for two, and we're talking about fajitas stacked up this high. We will eat all we can and then box that stuff up, come back home, and make a whole nother meal out of it. And we're talking like if we only ordered the fajitas, just got that out the door, I think we get that for $25.99. There's nothing else like that. I mean, you're talking, you can go to wherever you want. Go to Outback or Texas Roadhouse or any of these, these chain restaurants, and you're just like, it's like we went to, recently I sold my Outback stock because we went to, we stopped at one in Meridian, and we got everybody. I don't think anybody at the table was very happy with their, with what they ordered. Our chicken was cold. The burger that my girlfriend's sister had ordered was nearly raw, and it was cold, and it was just a bad experience. And like, as I was sitting there, I was like, I was already kind of questioning where the restaurant industry was. I did make a small profit off the stock, but nothing to, write home about. So, all right, we'll get back on track here. They also had recently cut their dividend by 80% to fund they're talking about to fund this restaurant overhaul that they had just mentioned in the video. It's like 700, I think it was 700 something thousand. I don't know what that figure was, but they're doing a massive 700 million to do this restaurant overhaul. So they cut the dividend back in May of 2024. And if we reference the share price here, yeah, the dividend was cut from $1.30 per quarter now. So you could make that's pretty healthy dividend, especially at this price here. But when they cut that thing, man, they would have announced that. I'm going to say somewhere right here when you start seeing these sharp declines. No, right in here. My bad. Down here with these sharp declines, because, that was probably a level of support if I had to guess. Yeah, it was sitting on support right there when they cut that dividend. Boom, broke down to around somewhere close to, $34 a share. And it got a little pickup between would have been September 2024 and April of 2025, and it took a sharp decline based off those tariff fears, right? Yeah, and if we're looking over their earnings over the last few years, you see 2020 is a plummet. Basically anywhere you look, any restaurant stock you can look at, it's going to be like this. But 2021, when it started to recover, this is earnings per share. It's never gotten back to pre-pandemic levels here. It is just, and also since 2022 has slowly just declined. Same thing, 2021 slowly just declined on the GAAP EPS. And if we're looking at revenues have been, revenues are higher. earnings are less. Slightly higher. They were 2019 is 3.06 billion, and in 2023 3.45, 3.47. Yet they cannot get back to here. And if you've watched the channel, all you hear, I've focused on the housing market a lot, and I'm glad I'm looking over the restaurant stocks now. It's because costs are up and people are just not spending as much. It comes down to the end of the day. I mean, if you look over the economic reports lately, it's telling us plain as day, yet stocks are still running, mostly technology stocks, though. It's very, the stock market right now is very concentrated on those stocks. I mean, even if we look, and I'm telling you, like what would it be? Bloomin', it's had a very similar experience lately, right? And they've cut their dividend a few times. So it was 24 between here and there is 15, 15, 15. I believe they cut it just recently. That's why you would have had this big drop here. And I wouldn't be surprised if you see this thing goes down to $5, right? So, and if you're not familiar with that, that's a Outback stock, right? So, some more on. Let's look over their financials. Cash flow going in the wrong direction. Leverage free cash flow, cash from operations last 2023, 2024 going in the wrong direction. Just negative cash flow right there. Revenues have been going in the right direction, but the total assets are decreasing and equity is decreasing, and with liabilities, the equity in the company is decreasing faster than they're decreasing the liabilities there. So, that's not good. And my last point I wanted to make here is that, so GMT Capital, they're like a 12% stakeholder in the company. They've got some people on the board, of course. They bought up a whole bunch of the stock back during that April dip. And if we back it out, that's been the only purchases, right? Last time was a sale by president of the company. He sold 1.6 million, and then they bought it up right here. But no other board members are buying up shares, so that's something to be wary of, in my opinion. Yeah. I wanted to do a quick run through where we at. We're at about 14 minutes. So there you have it. I know everybody likes these short videos, and I just wanted to run through Cracker Barrel stock. So leave me a comment if you think, Cracker Barrel stock's a buy. If you think that, give me your opinions. I'm not going to touch any of the restaurant stocks currently. Not with the state of the economy. I think if we see any significant downfall, you're going to see a lot of these companies just shut their doors. And, I don't know about Cracker Barrel being one of those, but you could definitely get a lower share price, right? So, yeah, I sure do appreciate you guys hanging along, tagging along, and checking out what I had to cover on Cracker Barrel stock. If you think I've earned it, go ahead and leave me a like. And, of course, you can always subscribe, and I will see you on the next one. All right.